Hey everyone, welcome back to my channel. Ben Morales here, your personal financial coach. And I wanted to make this video to actually show how you can use a line of credit as if it was a checking account. I'm working with the client here, didn't even know that that was an option for him to do. And again, you can use it. You can use this strategy with a line of credit, personal line of credit. You could also use this credit strategy with a home equity line of credit. And it's no surprising, right? It's no surprise that you didn't know that this was something you could do. Again, this is not something that you go to a bank and they'll tell you that you can do this. Again, lines of credit really don't benefit a bank. If they're used the right way, they actually benefit you. So that's why they always try to push you into getting a loan. But in this example, what we're going to do is we're going to show how a line of credit could actually replace a checking account, and it could help you to actually speed up the process of paying off debt. In this particular client, what we're doing is we first need to look at how do we do things today. So how we do things today is, in this case, gets paid twice a month. This is the actual income of the actual client. But if we divide that by two, then it looks like 2 times a month, there's income coming in of $3,341.73. So when you're starting to practice velocity banking, one of the things that you need to realize is you have to learn to think like a business. Okay, you are a business. You have cash flow. They call it income, but what it is cash flow. Where you put that cash flow first and how you manage it will determine how much more quicker and how much more efficiently your credit gets paid off. So I'll give you an example of how it's used now, right? Biweekly, $3,341.73, and it's in blue, right? Because we want to give the illusion that it's cash flow, it's supposed to flow like water. So it's blue. So typically what we'll do is money will go into the bank and it'll stay in the bank until we need to use it to pay off a bill. So somewhere between the 1st and the 5th, a bill is going to get paid. It's typically going to be a rent payment, or it's going to be a mortgage payment, something that deals with housing. Okay, those I usually do at the beginning of the month. So the money staying in the bank, a portion of it is coming out to pay for the rent. Let's say it's going to be the $1,149.18. So that's already covered, right? Within the first 5 days, that got covered, but the balance of that money is still in the bank. Now, somewhere between the 6th and the 9th, the month is going on. Now we're going to have more expenses. We're going to have some kind of vehicle expenses. It might be putting gas in the car. It might be car insurance, something to that nature, right? It might be a payment that you have. But again, cash flow staying in the bank, and then the money is flowing out, right, from that bank account to meet those particular needs. Let's keep going. The month from the 10th to the 12th, somewhere along the line there, going to go out to eat at a restaurant, and they're going to do some grocery shopping, right? Get some milk, bacon, and some bread, things like that. So somewhere in there, money's going to be leaving the economy to meet the groceries and the restaurant, those kind of needs for the particular month. Now, by the time we get to the 13th and 14th, the reason why it's in red is because, like most of us, leaving money in our bank, that's where we get that term living paycheck to paycheck, because the money's sitting there in our bank and we know that we can't touch it because we got this next bill that's coming up. So that's why it's in red. But thankfully, what happens after the 14th, we get the other part of the payment coming in to the bank, right? But that's where it stays. It stays in the bank. So the other part is $3,341.73. But then it continues with the flow again, somewhere between the 16th and the 17th, more bills are coming out. Maybe it's the cell phone bill that's coming out, right? The cell phone has to get paid. Then between the 18th, we got things like the light, gas and water, all the other utilities that apply to the home need to get paid, right? So cash flow is blue is coming out, right? We still have a good amount of cash flow. Now we have enough to pay for the student loan, right? That's coming out somewhere between the 24th, and then somewhere between the 25th and the 28th, the other bills are coming out, including debt that this client had of $19,210. That's got to come out. That's got to be paid as well. So again, that takes us to the living paycheck by paycheck. This is the red zone, right? The red zone, because if something happens, he runs out of sick days or something like that, that amount of money will not be there. So totally different from a line of credit. The line of credit, we'll see what that looks like. But that's how our typical cash flow looks like right now when we're utilizing the banks and we're having to wait to get our deposits into our banking account so that then when we can disperse it and pay all of our bills. But what if we could change it up, right? What if we could leverage, in this case, a personal line of credit? So you might have a question. I like the idea of leveraging a personal line of credit. I just don't know how much I should ask for. That's a good question. When you go into the bank, don't get a loan, okay? If you're trying to pay off debt, do not get a loan. Ask them about personal lines of credit. If your bank does not offer you a personal line of credit, go to another bank and find yourself a bank. Start a relationship with another bank or with a credit union. I tend to leverage credit unions, or favor them rather. But if your bank doesn't offer you a line of credit, go find yourself another bank or credit union that will. There are plenty of credit unions and banks that will offer you. And then you can establish, like in this example, a personal line of credit of $20,000 at a 9.49%. Why did we do 20,000? This is good for you to know when you go to ask for a personal line of credit and they're asking you, how much is it that you want? Take your income, multiply it by 3. And that'll give you a good indication of how much you should ask for. If we did that, 6,683 times 3 is going to be just a little over $20,000. So the nice thing about it is if you get approved, that's a $20,000 line that you have at your disposal to always use. Now, if we look at the monthly expenses, there's never going to be a period really where we're going to spend $20,000 or at least charge $20,000 against our personal line of credit, because all we're going to do is we're going to replace the bank, and we're going to leverage now personal line of credit. Now, what does that look like? Well, what that means is at the beginning of the month, let's go back to the beginning of the month. Instead of leaving the $3,341.73 inside the checking account, we will send it, right? This is half of it. So this monthly income, which is $334.71 times 2, going to go into your family line of credit. You can name it whatever you want, right? My name is Morales. My last name is Morales. So you can name it Perez. You can name it Jacob. You can name it Thomas. Whatever you want. Smith family line of credit. And so what will happen is instead of leaving your money in a checking account, put it in a line of credit. And then from the line of credit, you start to draw and make payments toward your home, right? If you need to make a rental payment, very easy. Go to your line of credit, draw $1,000, $1,500, $1,200, whatever your rental payment or your mortgage payment is, and send it to your homing expense. Okay, then do the same thing for your car expenses, and do the same thing to eating out of restaurants and for buying groceries. And then the next time you get paid, this will actually serve as a payment. This $3,341.73 serves as a payment. Remember, I said, look at income as being cash flow. So cash flow is coming in once again. All right. You won't have to worry about these times, because these red zones, because what will happen is you'll always have that 20,000, which is more than enough to cover your monthly expenses for you. This is how you can leverage a personal line of credit, right? And you're going to just pull the money out of the line of credit whenever you still have to run the same expenses that you were running. The big difference is when it comes to credit cards, right? And you're paying 27 or 28% or 29%, whatever the case might be, and you have loans that are at 8%, 10%, depending on the type of loan it is, you can see that the cost is a huge difference from using a line of credit. Not only that, the lines of credit are calculated on a different basis in terms of the loan, which is average daily balance. So as you are making payments and that cash flow is coming back into your economy, you're creating cash flow. You're creating cash flow. It's not just income, right? I want to challenge you not to just think about it as income, but actually what it really is cash flow, right? And you're eliminating the blocks in cash flow that were existing when you had the money in a checking account, right? And so that's how you leverage a personal line of credit, and you just make your deposits of your check into the line of credit at the very beginning when you get it. So you're technically changing one thing, and you run your expenses through that line of credit until you get to the point where you eliminate your debt. At that point, if you want to continue to then make deposits into your bank account to build up your savings or doing things like that, you can do that as well. But you can actually leverage that line of credit to do any other your borrowing needs. And the nice thing about that is it's always going to be available for you, and you only pay the interest on what you actually use. So I hope that makes sense for you. Please let me know and put down in the comments any questions that you might have. I try to get back with all the comments that my viewers might make and give you responses in a timely fashion. Please like, share, subscribe, and continue to follow my channel. I do thank you for your support. I do thank you for your time. And until the next video, I look forward to talking to you again soon. Take care.